I've heard it said that the 7 most expensive words in the English language are "my accountant takes care of my taxes."
Somebody's got their, CPA, and think about it as your primary doctor, the one you go in and get annual checkups, semi-annual checkups, or whatever. But if you have to have surgery or whatever, you need to go see a specialist, somebody that's got some additional training and skill sets. And I think about tax attorneys and tax planners like that specialist.
Most Main Street CPAs don't do a whole lot of business sales. I know accountants who've never done $1 million business sale for a client. So why would you expect them to be expert in keeping the tax bill down when there are people like you and me who have worked with more clients than we can count, who've done 7-figure, 8-figure, 9-figure, and even 10-figure business sales?
Hey everybody, Steve Burton here with the Scale to Sell podcast. Welcome back. If you're a business owner, we're a team that helps you grow your business and then exit it on your own terms. Today's topic, we're going to be talking about how successful business owners legally pay less taxes with our lead tax attorney, Ed Lyon. A little bit about Ed before I bring him into the conversation today. Ed, I tell my story. I was looking for somebody like you for 20-something years. And a lot of CPAs told me that they did tax planning, but I really never found anybody that did anything other than just basic stuff. And so I was happy that I stumbled upon you. A little bit about Ed Lyon is our chief tax planner. One, he's worked on Capitol Hill during the landmark 1986 Tax Reform Act, been featured on Fox News, CNN, MSNBC, CNBC. And I don't know how you got this title, Ed, but you're become known as the funniest tax guy in America. So how in the world can you take a subject that sometimes is boring and complex as taxes and become known as the funniest tax guy in America? But Ed Lyon, welcome to the show.
Thanks. Well, funniest tax guy in America. Nobody else wanted the job. So it made it easy to sneak in. Really, when it comes to entertainment value in taxes, the bar is really low. So I don't have to work hard to look like a superstar. But there's nothing funny about leaving money on the table. And as you've seen in the 20 years that you've been looking for somebody like me, business owners do that all the time, not just when they're operating their business, but when they exit their business.
No doubt. Hey, in many cases, and I said this even before I met you guys, there's tax preparing and there's tax planning. What's the basic difference between the two? I think most CPAs, accountants, enrolled agents do tax preparing pretty decently, but what's the difference between that and tax planning?
Yeah, I mean, most tax professionals do a perfectly good job telling you how much you owe, but they don't tell you how to pay less. That's the real key. And it's not just a matter of digging deeper into your pocket or your Amex statement to find more write-offs. It's a matter of how you structure your business, how you structure your compensation, how you structure employee benefits for yourself and your employees, how you manage your real estate holdings and investments, how you manage your portfolio, and then finally, how you end up selling your business. We've got 15 different strategies that we can use. Some of them have to be in place before you sign a letter of intent. Some of them have to be in place before you close a sale. Some of them are after the fact offsets. But you've got to do your homework ahead of time. I had a guy come to me in December of last year. He had sold his business in August for $55 million and was just now looking for ideas to pay less tax.
That paints himself into a corner and probably limits greatly what you could do for him, I would think.
Absolutely. And we were able to find things for him even that late in the year, but we weren't able to do everything that we could have done.
My own story is, and I've told this story a number of times, I've used the same accounting firm for over 30 years. And because the IRS hasn't shown up on my doorstep, and because we get some tax breaks or whatever, and I don't feel like although I make pretty decent money, I'm not in the top bracket because of some strategy she uses, but it's nothing significant. I'm still writing larger and larger checks every year. And so again, for some, like you talk about, it's the exit. But for me, it's about the income tax. The more successful I am, the more money I feel like I'm paying in taxes right there. And I've been looking for some way to legally beat the IRS, Ed. I know that topic and title is a little, it comes home to you a little bit, but just let's talk about this, a business owner still working, and just some thoughts right there to reduce or even in some cases erase their income taxes.
So a lot of business owners start their company 10 years, 20 years ago. They decide that they're going to be an LLC. Maybe they're going to have an S corporation election. They set it and they forget it. So the first thing that I do when I'm sitting down with a business owner is ask if they have outgrown their old entity structure. Maybe there should be a C corporation in the mix. Maybe there should be something like a captive insurance company in the mix, an IC disc, all sorts of things that you can do to minimize tax simply by structuring your business entities more appropriately. I talk with a lot of business owners about qualified retirement plans. They're usually not the right answer for most business owners for various reasons. So we're not just talking about throwing more money into a 401k or maybe a defined benefit or a cash balance plan. And then once we're done looking at the business level, we look at the individual level because we have strategies that can help high income business owners and W-2 employees offset their tax. If you're a surgeon making $600,000 a year and you're getting a W-2, a lot of accountants are going to say, it's a W-2, you just got to suck it up. And that's not always true. There may be strategies available that you can offset some of that income. So you earn $600,000 on a W-2, your employer withholds tax for a W-2, but we find a way to get your taxable income down to $400,000 or $300,000. That means a big refund coming back from Uncle Sam.
So it's about guys like me that aren't ready to retire yet, maybe one of these days. And so there's ways to get and mitigate income taxes. But again, we're helping a lot of the baby boomers, Ed, take their business to market. And we've faced some clients like you talked about that try to, mitigate the taxes after the sale or a day or two before the sale. And so tax planning when it comes to the exit. So we typically tell a business owner, you want to start talking about the sell of the business as to whether you're in financial shape to harvest enough equity and walk away from the business. But we try to get them to do it 2 or 3 years in advance.
Yeah.
But that's about the same time you should be talking about. If you're talking about an exit, shouldn't you be talking about what's the capital gain on this business going to be? If I'm going to sell it for $6 million and I'm going to owe $1.5 million in taxes, you want to know about that as a tax planner as soon as possible, don't you?
I need to know about that as soon as possible. And a lot of business owners think, oh, the capital gains tax is 20%. Well, they forget if they're selling real estate, there may be unrecaptured Section 1250 gain taxable at 25%. There may be equipment recapture taxed as ordinary income as high as 37% plus whatever your state bracket is. So you can't just think to yourself, oh, it's a 20% capital gains tax. And when I'm signing the paperwork, I'm going to call my CPA and ask if there's anything I could do to pay less. There are lots of things that you can do to pay less, but you got to make that call sooner rather than later.
And going back to the CPAs, I have a business owner. And I was telling him a story about how we had somebody that was wanting to sell his part of a building. He didn't want to sell it, actually. His partners did. And he was going to lose $100,000 a year in income from the business, from the real estate, his cut. And he was going to, have to pay some capital gains. We figured it was over north of $300,000. I was telling that story to this other business owner. He goes, well, I've got a building too. I was wanting to sell, but my CPA says, I just got to keep it, hand it off to my kids in the future so they can get a step up in basis and just write. Because if he sold it, he's going to have to pay $450,000 or something in that area in capital gains. So back to your point, most CPAs will just tell you got to write the check, but that's not the real answer, is it?
Ultimately, the real answer comes down to what you want to do with the proceeds of the sale. If you own a building, if you own equipment, if you own a business, that's equity. That's money. It's locked up in the form of the building or the equipment or the business. So the question is, you're moving your equity out of the business into something else. I got to know what it is you want to put that money into. If you want to put it into real estate, there may be one set of strategies. If you want to put it into the stock market, another set of strategies. If you want to put it into an insurance product, a third different set of strategies. So it's not enough to just say, oh, you're selling a business for $3 million. Your accountant, fully depreciated Frank, says just hang on and die with it and let your kids inherit it. I mean, maybe that does work, but old fully depreciated Frank is missing out on a whole lot of opportunities.
We talk about miss, and the CPA accountant is one of the most trusted advisors in the financial world pyramid of business owners. They believe in them. They've had them, like me, had the same accounting firm, and I joke because the IRS hasn't showed up on my doorstep. I assume that they're doing everything possible. Well, they're checking the boxes, but
yeah.
Back to the myth thing. What is a myth that jumps to your head? To me, is maybe that we trust in the CPA so much that we don't think about outside of the box, and we just assume that it is what it is. But is there another myth, or is that maybe the number one on your chart? Is there something else that when it comes to tax planning that people don't understand?
I've heard it said that the 7 most expensive words in the English language are "my accountant takes care of my taxes." The myth is that the accountant helps you pay less. Again, going back to what I said about 10 minutes ago, my accountant takes care of reporting your taxes and keeping the IRS from showing up at your door. And that's great. That's important. And nobody wants the IRS showing up at their door. But that is not the same thing as saying my accountant helps me structure my business exit so that I can keep more of what I get. And ultimately, that makes for a more successful exit for everybody. First of all, if you're a business owner and you're not getting enough money from the sale of your business to meet your income needs, you're not going to sell the business. So tax planning makes it likelier that we can get you out of that business with the after-tax net necessary to generate that income. I have, as a tax planner, helped a lot of business transitions succeed simply by helping the seller get the money that they need out of that transition. But most CPAs, most Main Street CPAs, don't do a whole lot of business sales. I know accountants who've never done a $1 million business sale for a client. So why would you expect them to be expert in keeping the tax bill down when there are people like you and me who have worked with more clients than we can count, who've done 7-figure, 8-figure, 9-figure, and even 10-figure business sales?
One other thing that comes to mind there too. So if a business owner, you're the business owner and you're one of your CPA's largest clients, I don't know, but they don't want to lose you. I don't think, Ed, they don't want to lose you from being a client, because they're going to lose that revenue more than likely. So it goes away. So I'm not saying they're trying to derail it. I just think they don't know what they don't know in many of these cases.
In a lot of cases, they don't know what they don't know. In other cases, they feel challenged and they may feel out of their depth. And that's certainly something that I can respect. But it's really expensive to blindly trust those 3 letters, CPA, at the end of somebody's name, and to assume that those 3 letters mean that they can get you the best exit from your business. There are 665,000 CPAs in the United States right now. If we assume the average CPA is 5'7", and we lay them head to toe, starting at Grand Central Station, they will reach the suburbs of Atlanta. It just beggars belief to think that all 665,000 of them are experts at helping you sell your business for the best possible after-tax result.
Wealthy people have used tax attorneys, tax planners for years to lower their tax bill legally. So anybody hears these strategies, and I know for you and the part of the team, Ed and I are associated with a team of people here that we try to help successful people pay less taxes. But legally is a big deal, right? And that's tax attorney. How can we legally, this is not as simple as just signing a form or ignoring this. You got to use these strategies legally, ethically, morally to erase
Right.
or greatly reduce the taxes, right, Ed? A little bit to that.
Yeah, you've got to pick a strategy and you have to implement that strategy properly. You've got to dot your I's and cross your T's, because if there's a large dollar amount of taxes on the table, the IRS is going to take a close look. And it's not going to be enough that you picked a legal strategy. You've got to implement it in a compliant way. And then you've got to avoid some of the strategies that are promoted on social media these days that simply don't work. For example, there's a trust that I see marketed all the time that promises if you move your business into the trust and the trust sells the business, that you can declare the income to be a special dividend and not have to pay tax on it. It's based on Code Section 643B. Well, the IRS issued a general counsel memorandum in 2023 that states very clearly that it's based on misreading Code Section 643B, and in fact, it is not compliant. So there are strategies that are legal that will work if you implement them properly. There are strategies that are more aggressive and may work if you implement them properly. And then there's strategies that simply don't work, but somebody wants to sell you a $50,000 trust package.
Kind of look at it, if somebody's got their, CPA, and think about it as your primary doctor, the one you go in and get annual checkups, semi-annual checkups or whatever. But if you have to have surgery or whatever, you need to go see a specialist, somebody that's got some additional training and skill sets. And I think about tax attorneys and tax planners like that specialist. Somebody might only need them one time. It doesn't mean you necessarily have to fire your CPA, but in many cases, you want to bring a specialist in to take care of this, sell the piece of property or the business, or maybe you're like me and just getting whacked in income tax. But Ed, is that a good example?
Yeah, that is a great analogy. That's a great analogy. I love analogies. I can't make it through more than a couple of hours without an analogy. Your CPA is probably perfectly adequate for your day-to-day business needs. You may have outgrown your CPA's ability to structure things for you, so you bring in a specialist. That's what we do together through Excel Empire. We come in as a tax planning specialist. And certainly when it comes to something really important, like selling a business, I ask my clients, when was the last time you did something very important for the very first time and nailed it? That's not likely to happen. So the world is full of specialists who come in, help you when needed, and then fade back into the background when you don't need them. Tax planning, for a lot of people, is exactly that sort of a specialty.
My situation is my wife that does our books and whatever. We have this accounting firm I've mentioned now several times. And she goes, well, what are we going to do with them? I said, pay them the fee. I don't care. Keep them doing the, monthly stuff, quarterly stuff, whatever you want them to do, map it up. But the tax team here saved me hundreds of thousands of dollars in income taxes. I said, write the check of it. She went over and paid the lady for the full year, told her what we're going to do. And the lady said this, you'll appreciate this. She says, she looked at Annette after Annette told her what we were going to do. She goes, well, I guess you've outgrown me. Isn't that a common? I mean, we kind of talk about that.
It's very common. You did not make a mistake when you picked your CPA 10 years ago. They're not doing anything wrong. It's just not the same fit that it was before.
Right. So whether you're trying to reduce income taxes or whether you got a sale pending that will be coming up, and again, do not wait till after the sale is closed. A couple businesses we've got going to sell right now, we are specific with getting the tax team together with them and going through the scenarios and getting inserted into the agreement, the closing sale of that business before we do so. And that is vitally important, Ed, I think, before the sale, so that you can insert into the contract with the new owners some verbiage in there that allows you some flexibility to do these advanced strategies.
Right. They say it in the military, prior planning prevents piss poor performance.
No doubt. Hey, if business owners right now, if they can remember one thing from our conversation today's just in general terms, broad brush, right? But, they're going to want to follow up. But if there's one thing to come to mind, I would say, what if, why not get a hold of him? We got some opportunities for you guys to get in contact with the tax team. But Ed, what would you say would be one thing that they could take away from this conversation today?
Well, I'm going to give you two things. One, don't assume that your CPA is a tax reduction specialist. Most of them aren't. They're perfectly capable of giving good advice at the end of the year. They can help you buy a truck in December and get a bonus depreciation deduction. They can help you set up a SEP and throw a little money into a pension plan if kicking the can down the road is the right answer. But they are, for the most part, pretty inadequate at doing sophisticated planning, especially this time of year. They're gearing up to do tax returns for the next, we're early part of the year, February, March, and most of April, they're doing tax returns. They don't have time to help you pay less. That's just the reality of full appointment books. The second lesson is, if you're going to sell something big, don't do it before you check with us, because this is what we specialize in doing.
Tax planning is an important subject, guys. Just closing action items right here. Go to scaletosell.com/discovery or click in the show notes below to save this commentary and or get a complimentary, no obligation, 15-minute phone call. And I normally start with a 15 phone call with me, so I know who on the tax team to get back with. So I'd encourage you to go to those notes again, scaletosell.com/discovery. And and get back with a 15-minute phone call, because I don't think your tax rates are going to go down anytime soon, Ed. In fact, my concern is in a couple years' time, after 2028, they might go up dramatically. Any final thoughts as we wind down here?
Well, don't assume that anything that you heard. Well, we're talking core lessons. But yeah, let's not worry about the specifics of what's going on now. Tax rates are going to have to go up. We have a $38.5 trillion national debt right now. The annual deficit has increased even since Donald Trump has taken office. We're spending money that we don't have, and ultimately we're going to have to raise taxes and inflate our way out of it. Those are two pretty dire financial consequences that we can help you with.
No doubt. Guys, business owners, again, one more time, scaletosell.com/discovery. Ed Lyon, our lead tax attorney, we appreciate your time. And take action, guys. Go to the show notes, click on the link, and get back with us. Set up that 15-minute phone call. We can help you out. Ed, appreciate your time. As always, we'll see you next time.